Hey everyone, and welcome back to the channel. Today, we're diving deep into something absolutely fundamental for any trader or investor: chart types. You've probably seen these colorful charts, but what do they all mean? Understanding how to read them is your first step toward making smarter decisions in the market. So, let's break down the most common types and see what makes each one unique. First up, the king of all charts, the candlestick chart. If you've looked at any financial platform, you've seen these. Each candlestick tells you a story about a specific time period, whether it's 1 minute or 1 month. It shows you 4 key pieces of information: the opening price, the closing price, the highest price, and the lowest price. The main rectangular part is called the body. If the body is green, it usually means the price closed higher than it opened, a bullish sign. If it's red, the price closed lower than it opened, a bearish sign. The thin lines sticking out from the top and bottom are called wicks or shadows, and they show the highest and lowest prices reached during that period. Candlesticks are incredibly popular because they give you a quick, visual snapshot of market sentiment and price action. You can see the battle between buyers and sellers in every single candle. Next, let's talk about a fascinating variation of the candlestick chart: the Heikin Ashi. The name means average bar in Japanese, and that's exactly what it does. Heikin Ashi charts use a modified formula based on average price data to smooth out the noise of the market. Unlike regular candlesticks that use the simple open, high, low, and close, Heikin Ashi candles are calculated using information from the previous candle. This creates a chart that looks much smoother and makes it easier to spot the underlying trend. You'll notice long strings of green candles during an uptrend and long strings of red candles during a downtrend, with fewer small fluctuations. This is great for trend-following strategies because it helps you stay in a trade longer and not get spooked by minor pullback. However, because it's based on averages, the prices on a Heikin Ashi chart might not reflect the exact market prices. So it's not ideal for scalping or day trading that requires precise entry and exit points. Now, let's move on to something simpler: the line chart. This is probably the most basic and familiar type of chart. It's created by connecting a series of data points, which are typically the closing prices for a given period. You get a single, continuous line that shows you the general direction of the price over time. The biggest advantage of a line chart is its simplicity. It cuts through all the noise and gives you a clean view of the primary trend. If the line is going up, it's an uptrend. If it's going down, it's a downtrend. It's excellent for looking at long-term trends and getting a big picture overview of an asset's performance. However, because it only shows the closing price, it leaves out the intraday volatility, the highs and lows. You won't see the price swings that happen during the day, which can be crucial information for short-term traders. Finally, we have the bar chart, also known as the OHLC chart, which stands for open, high, low, and close. The bar chart is kind of like the skeleton of a candlestick. Each bar is a vertical line that represents the trading range for the period, from the high to the low. Then, there are 2 small, horizontal lines. The small horizontal line on the left side of the bar shows the opening price, and the small horizontal line on the right side shows the closing price. Just like candlesticks, bar charts give you all 4 key data points. Some traders prefer them because they find the clean, simple lines less visually cluttered than the filled bodies of candlesticks. The color of the bar can also indicate whether the price went up or down. Just like with candles, it really comes down to personal preference, as both chart types provide the same amount of information. So, to recap, candlesticks give you a detailed visual story of price action. Heikin Ashi smooths out the noise to make trends clearer. Line charts offer a simple, big-picture view of the trend using only closing prices. And bar charts provide the same data as candlesticks but in a different visual format. Which one is best? Well, there's no single right answer. It depends entirely on your trading style and what you're trying to analyze. Many traders even use a combination of different chart types. The best thing you can do is experiment with each of them and see which one you feel most comfortable with. Thanks for tuning in today. I hope this breakdown helps you feel more confident looking at financial charts. If you found this video helpful, please give it a thumbs up and hit that subscribe button for more content like this. Let me know in the comments which chart type is your favorite and why. Stay curious, and I'll see you in the next video.